So I know there were at least a few tickers and other aspects of this category, these consumer staples category that you want to highlight and how they've outperformed this year. So where do you want to start?
I want to dive in with the largest holding of the XLP. Listeners, I'm going to pause for 2 seconds while you try to guess what is the largest holding. I think I already gave it away earlier in the show. It's Procter & Gamble, which is 13% of this fund. I know there are some board members probably at Procter & Gamble who these past few weeks are thinking, how do you like me now? Because this was an unloved stock. I'm going to give you the annual average return of Procter & Gamble since going back to this period that Vince talked about, the beginning of the financial crisis. I did a search for an anchor date of the January 1st of 2008. The company has only returned about 7% a year in this great bull market versus the S&P's nearly 13% annual return. And that's because it's had very slow organic growth. It's had to compete with the smaller brands that have taken advantage of e-commerce and how cheap it is to build out a new brand and take it to market. It's had some other difficulties in its approach to brands, which we've talked about on this show, and listeners are familiar with just the plethora of products that it has had in the past. It has reduced that product line. It's reduced its brand line. Still is looking for a turnaround. And of course, we've also recently talked about board member Nelson Peltz, who's an activist shareholder looking to affect change at the company. The reason that Procter & Gamble, which was down almost 26% just a few months ago, is now even for the year and is one of the best performing stocks in the S&P 500 over that period, is that it's a stalwart flight to quality company. When you hear the talking heads on TV mention defensive stocks and these terms, flight to quality, they're really talking about these companies which grow revenues very slowly, because the more stable the cash flow, the less volatility there is in the earnings. So what becomes a black mark on a company when the market is rising and technology companies are grabbing everyone's attention, those become virtues when folks are starting to run scared and thinking about what's going to happen to my capital. I had it invested in some high-flying stocks, and I see they're down about 25% in just the last couple of weeks. How will I preserve that capital? This is why a stock like Procter & Gamble becomes so attractive. And I should mention that in addition to the really stable cash flows it's known for, it still throws off that widows and orphans dividend yield, which we've talked about on this show. I looked this morning, it's currently at 3%. That's not a bad yield if you have to park some of your money. The reason that this stock in particular is starting to stand out on many lists is because of the relative underperformance over the last few years. So the thinking is there's some upside here, especially if Peltz can initiate some of the change he wants. Maybe this could be more than a 7% return, and it provides that defense in an uncertain market. What are your thoughts, Vince, about P&G?
No, I think that's a great overview. And it's funny because we last talked about P&G in late September. And really, I don't think anything has changed fundamentally since then in terms of the story. We know that around the middle of the year, the stock got a boost thanks to the push from activist investor Nelson Peltz. But we're not at a point yet where the company has come out and officially announced that they're adopting any of these major changes that Peltz has offered up as a way for the company to kind of return to the stronger growth and better, portfolio of brands that it had. But stock's up over 17% in the past month. And I think you summed it up as somebody, even though the story hasn't changed, as somebody looking in from the outside, you have a company that is looking to pay $7 billion in dividends and do $5 billion of share buybacks for fiscal 2019. That has to be looking pretty good right now, as do, even though they've been struggling relatively for the company in terms of growing their market share or maintaining their market share. There's still a company that has a portfolio of many well-known household leading brands. And I think that really does sum up this idea of the flight to quality.